Hello friends, welcome. Let us try analyze today's market Nifty 50. Today is 5th December. So what we usually do is mark the important levels of previous day. So previous day is low, previous day high, and there is one more, like, not so important, but one more line we can extend, which is a supply zone. It's a very narrow supply zone, but we can still mark it. This one, this, there was a big drop from this side, and the same candle has dropped here, so that we can extend. Yeah, here, yes, this is a very narrow supply zone actually. Yeah, so what happened, this was a big fall from this side yesterday, and then again when it retested again there was a fall. So this is a big resistance. So we have to watch market if reverses from this point or market breaks this point. Now one more important level is this virgin CPR. Since yesterday also it could not be touched, so it still remains virgin, so that we can extend for today. So virgin CPR is extended, PDL and PDH is marked, previous day low and previous day high, and this was a selling zone, we can say. Now you see, when the first candle has opened exactly below this selling zone, but the first candle is neutral candle. This is not a bearish candle, because it has wicks from both the sides. Wicks from top is fine, but there is a wicks from bottom also, so it's a neutral candle. So neutral candle means indecisive candle, so there is no trade on this first candle. Now we have to see how it behaves. Like, okay, but since this was on the supply zone, if this would have been bearish candle. And one more very important thing is, today's CPR is very narrow. Okay, very narrow means this will be very tricky day. This can be trending or zigzag day. This is very narrow. If it is narrow, fine, we can predict maybe trending. Okay, but if it is very narrow, it can be zigzag. Most of the time, like how market behaves on the event day, when there is some news or election or something, that time market behaves zigzag. That's the same pattern market can follow today. This is just a prediction. So okay, the first candle, if it would have been bearish candle, there was an entry here. It could have been a short entry because it is reversing from the supply zone. So the second candle, third candle could not. Fourth candle exactly took the resistance from this level. So you can go short here. Okay, on the fourth candle, you can go short. Your stop loss will be above the day's high somewhere here, and target is twice, like at the CPR. CPR is narrow. Narrow CPR is very weak CPR. It is not powerful at all. The wider the CPR, more powerful it is. Narrow, very narrow CPR is as good as there is nothing. Like you can ignore this CPR. This is not a resistance or support. So, and the second entry was, we could have taken the entry here, but if you see this portion, yeah, it's broken. Fine, we can take the second entry here. So this is like, you can go short on this candle, but since it is exactly on the CPR, okay, if CPR is on the way, we can take the trade, but since it is exactly closing on the CPR, this will be low probability trade. So entering here, stop loss above this and twice although the trade hits your target, but this is low probability trade. So what is the next trade? Next trade is 20 MA. Is the 20 MA trade here? Okay, this is, most of you will see that this trade, the 945 candle, is a candidate for 20 EMA retracement trade, but I'll tell you why it is not. Because 20 MA retracement trade is powerful when there is some more resistance or support along with this 20 MA. Now you will say the CPR is already there. Yes, that is correct, but CPR should have been on above the 20 MA. So when the 20 MA will work, 20 MA first, and then above top of that there should be pivot or CPR or any resistance, something like that. But it is ulta here, it is reversed, it is opposite. First is CPR and then there is a 20 MA. So 20 MA should have been below this CPR, then it would have it was a perfect setup for 20 MA retracement. So going short here, taking stop loss, and then twice the stop loss is your target. Now, so there is no trade here, no trade, no trade, no trade here. Okay, now I did not purposely mark this level, and I will tell you why the market has reversed from here. Okay, if you go day before, okay, not, yeah, day before, yes, exactly. Now without looking at those levels, I will show you how market respects the level. Without looking at those, the solid portion you take here and the bottom of this, okay, bottom of the low here. This is the strong buyer's zone. This is a demand zone, because market has reversed from this line. Market failed, then reversed and closed here. So this is treated as, this can be treated as demand zone. So when we mark it here, see where it reaches. Where it reached exactly. Understood? So now you see why market has reached here, and then if you don't have this level, how will you identify that why it is reversed from here? Okay, one more thing, even if you don't know about this level, you can still predict that market will reverse. Why so? Because when the market failed, and I told you this is zigzag, so for going short there is no entry. Now what this candle has done, 11 AM candle today, this candle has given you the fake breakout, and which is high probability, because today, since it is very narrow CPR, any pattern can work. There is nothing like, you know, today is we have to take only trending day or reversal day, nothing. Since this is a very narrow CPR, anything can happen, any pattern may work, may not work. So you have a freedom to go short or long on a strong setup. So this is a false breakout. False breakout usually is a high probability on which days? On the wide CPR days. But today we are taking it on very narrow CPR days. Narrow CPR, it is not a high probability, but very narrow CPR days you can take it. Now where it will reach, 1:2 risk reward, yes, your target will reach here, yes. See here, risk reward ratio 2, and this is your stop loss. And why did I take the stop loss not below this candle and below this candle? Because see, whenever there is a false breakout from the end of the day, like this is a fake breakout now, okay, market has closed above the day PDL, and it was broken first, and then immediately next candle is broken, and this is a high probability. Whenever there is a next candle, immediate next candle breaking the level, that will be for false breakout, that will be a high probability. Now, yeah, the question is why I did not take below this candle, the stop loss. Whenever there is a false breakout, you have to take the end of the day, like the boundary of the day. You know, if there is, the day is low here, because we are going long. If it is from top, it will be days high. That will be your stop loss, and twice the stop loss is your target. So your target hit here, and you are out of the trade. This trade worked. Now, okay, one more trade. Suppose you miss this trade. So what happened here? This market was like 4-5 candles were in the same range. Then this range was broken, and then it fell down, and then it reversed. Okay, now when it fell down, it came below the 20 MA. Now we have to see the candle which breaks this 20 MA. Here it is not broken here. Okay, this candle has broken. So which candle? Okay, if I remove this now, first trade is done. So you know, first trade is done, I will remove this. Now, you know, you can, the second trade will be for me since it has closed above this 20 MA, you can go long here. Okay, and now here, here the stop loss will be below the candle and below this PDL. So this is your stop loss, and twice the stop loss is your target here. Yes, this is your target. So second trade also, suppose you miss this trade, then this is the trade. Not everywhere you should trade. You have to get a confirmation from where we have a high probability, and trade only high probability trade. So this trade has worked, this trade has worked. Now this level is also broken. This candle has broken this level. Okay, what does this candle do? This candle has broken the day's high, today's high, and yesterday's high also. This is PDH, but there is no trade here. Means the trade has worked, but as per the setup there is no trade. We should not take the trade. Why? Because this is a parabolic breakout. When there is a consolidation and then the breakout, then it is a high probability. If it is a parabolic breakout, back to back green candles, okay, you don't know. In this is like a fire. You should not enter in this back to back big candles. So if you enter here, take your stop loss, twice the stop loss, your target would have hit, but it doesn't work. So if you still want to enter, where you should enter? On the retracement. Retracement means either this candle, 1255 candle, or this candle, 130 candle. So one of these two candles. So let us see, you entered on the this candle. Okay, this candle you entered, below the candle is your stop loss, below the candle, below that PDH, below the pivot, and below the 20 MA. See, there are 4 supports, so this can be a good stop loss. Now 1:2 is your risk reward. So where it is, 2 is here. So this, the target is hit and you should be out. Okay, why I am telling you once the target is hit you should be out? Because you see here how it reversed. Nobody, like, it's going in good direction, giving upside move every, like, this is called as higher end broken. Like, every candle is going up, and then from here the reversal has started. Okay, so, and this is a big candle which has broken this 20 MA. Now you will say, here this 20 MA, the market has broken the 20 MA, and here also this candle has broken the 20 MA, we should go short here. No, because this candle is huge. Please avoid taking trades on the huge candle, because where will be your stop loss? Your stop loss in this case must be above here, because it has to be above the pivot. See, one pivot, then 20 MA, then this pivot, and then this candle. So mostly market has a tendency to reach all the supports in the way, like supports or resistance. Here in this resistance, so your stop loss should be very strong, and keeping stop loss here will be huge stop loss. So this is not a good risk reward trade, so should avoid like this one. Then there is no trade here. So that's it, guys. Should trade with discipline, have your stop loss. Otherwise, this is like, today's market is a choppy market. It can take your stop loss both sides, any side, wherever it's a very choppy. It's like you may lose all your capital today if you don't follow risk reward. Understand what market is trying, have your rules written down, and just follow them. Let it be. In today's trade, even if you have a small profit, and you will say like it's a FOMO, fear of missing out, oh I missed this, instead of having big loss, it is always better to have a small profit and small loss. Small profit is okay, small loss is okay, big profit is okay. What is not okay is big loss. Please remember this. This is the mantra for trading. Okay, and I have been telling you check my previous 2-3 videos. I have been telling you continuously that this gap was formed, and this candle this is a daily time frame. So this candle has filled the gap. Now market will continue its upward journey, and this candle has given a confirmation. It closed above this daily 20 MA on a daily time frame, and it can be treated as false breakout. So it will move up. So Nifty can move up. Yesterday also I told the same thing. Anything can happen, but this was my prediction, and you see how beautifully, nicely market respects the levels and the patterns. Okay guys, thank you, bye bye, take care.